Those are all the top headlines that we're tracking from the world of commodities. But first up, let's put the spotlight on the kind of moves that we're seeing in the oil and gold market. And first up, gold. That has seen quite a bit of downtick in today's trading session. But as far as Brent crude is concerned, that too is sitting with a cut of nearly 0.5% today after inching 1.6% higher yesterday to trade near that $68.5 per barrel mark. Remember, several factors continue to remain at play for the oil market, and traders continue to watch out for the latest developments that are coming in from the Russia-Ukraine war, because any kind of peace talks would probably trigger a downside risk as far as oil prices are concerned, and that would probably push oil prices even further. As far as gold is concerned, that is seeing kind of uptake in today's trading session. In fact, as we speak, spot gold is trading with gains of nearly 0.2% to trade above that $3,370 per ounce mark. Now remember, in the global market, safe haven demand seems to be resuming, and this is on account of the latest comments that came in from Trump with respect to firing Federal Reserve Governor. And that is raising questions about independence of the Federal Reserve, and that has led to kind of uptick in the global market as far as safe haven buying is concerned, and that is the reason we are seeing that kind of uptick come in for the gold market as well. So that's as far as gold and oil is concerned. But apart from that, several commodities, other commodities continue to remain in focus. Which are those and what are the factors driving the move?
Hi Shesha, very good afternoon. Well, we are focusing on an agri-commodity today, and that's corn. It's because Chicago futures have climbed to a one-month high when it comes to corn prices. We did see a little bit of breather coming in, but then today itself, the prices did touch a one-month high. Now, this rally is coming on the back of strong U.S. export demand with net sales of 2.8 million tons. That was reported last week. Now, this is the second highest new crop sales ever for this time of the year. Now, adding to the momentum of course is Pro Farmer, which is pegged yields at 182.7 bushels per acre. This is lower than USDA's estimate of 188.8 bushels. Apart from that, ongoing dry weather and crop diseases like southern rust and tar spot, they're also fueling price concerns for corn, and that's the reason why we are focusing on corn today.
Corn prices continue to remain in focus. Kanishka, thanks so much for joining us with all those details. But shifting focus to the shrimp sector, and as I mentioned, one sector which is likely to be negatively impacted on account of the additional 25% tariff that has been notified by US administration is the shrimp sector. Remember, these tariffs will come into effect at 12:01 a.m., which is EDT time, and 9:31 a.m. tomorrow as per Indian Standard Time. One sector, as I mentioned, likely to be negatively impacted by this tariff news, at least in the near term, is India's shrimp sector. India's agricultural exports to the United States stand at about $5 billion, and shrimp and rice contribute nearly 60% of this $5 billion export to the US. Remember, Trump administration has imposed only a 10% tariff on Ecuador, a major global exporter of shrimp. So could this negatively impact India's shrimp exporters? Could India lose market share to Ecuador? To discuss and understand exactly this, we now have Mr. Nitin Awasthi, analyst at Incred Research Services, now joining us. Mr. Awasthi, thank you so much for taking your time out and joining us here on ET Now. And first up, if you can tell us, last time I remember when we interacted with you, you did tell us that you're very bullish when it comes to the medium-term outlook for the sector despite the near-term tailwinds that the sector could go through. We'll talk about the longer-term impact in just a bit, but before that, if you can tell us, in the very short term, since 25% tariffs are going to come into effect come tomorrow, what kind of impact will that have on India's shrimp exports, at least in the short term?
Okay, like you breaking down the question into three parts, so that's actually a good thing. Immediately, like you said, the tariffs are going to come in. In the starting of this month itself, we've seen shipments gone down to almost nil in case of shrimp exports to the US, because exporters are aware of this and they have taken action of it already. Whichever most of the containers that I know of which have left the ports of India this month have left the ports on the condition that the additional tariff will be picked up by the consumer, which is the importer in the US. So Indian producers are of the complete idea that 50% tariff, they're not going to bear it. The consumers, if they want to, if they're okay with it because of the holiday season, they have agreed to take it. And only even then, only a limited amount of shipments have happened in August. Uh, and that is the case and scenario on the exact moment that we stand on. However, this has to be seen with a little more perspective. If you look at um, just before August, if you look at Indian exports, calendar year exports, we would be up almost 20% same period last time. More than 20% same period last time. This is for like 7 months till July, if I count. So where did that extra export go to? That has all gone to the US.
Okay, so since you are telling us that Indian shrimp exporters will not bear the brunt of 50% tariffs, if you can tell us realistically, since you speak to a lot of them on ground, how much tariff will they be realistically be able to bear? I mean, if at all negotiations take place between India and US over the next few days, if the 50% tariff rate were to come down to say 25% or 20%, will the industry will then able to export to the US?
At 20%, the industry was gungo, which was the earlier rate. At 20%, the industry was gungo. There was a sharing between the importers and exporters depending on the products, which was arranged. And the industry was gungo, and they were okay with that amount being absorbed quite swiftly. Is that the number increasing by 25% is a shock. And that cannot be accounted for anywhere except the importer himself picking it up. And that is what the industry has, squared down on. However, important things like we again said earlier, that if you have to look at the exports till July and then you realize that 20% exports higher from India. Apart from this, you also have to look at the ground situation in the US. With this announcement, it won't be shocking for us to enter next month with a 100% increase, at least in premium shrimps, which are sold in the US retail chains. As of today, as of this 2 weeks, we have seen a 50% increase already from the beginning of this month.
And since you're saying, Mr. Awasthi, that the industry was okay with 20-25% tariff that was announced earlier, is the industry already in talks with the government to probably lower it down? Or if the government is looking to provide any other kind of additional support to the industry to bear the brunt of lower sales to the US because of the additional tariffs?
The incentives are not financial incentives as of now, but the government is helping open up talks, whichever we were stuck with other governments. One of the examples is Europe, of course. Europe, we were stuck for a very long time. A lot of exporters were stuck for permissions from EU. Finally, EU approvals have started to come in. Even if you look at the export data, you're finally seeing a lot of shipments moving to Russia, something which we had not seen, at least for the shrimp market, because of course every animal protein will have different requirements in different countries. So we have Russia, which has now become an importer of shrimp. We see the amount of shipments out there rising. Korea, the amount of shipments rising. Certain European countries, Belgium, Netherlands, the shipments rising. So yes, so those things are obviously constructive, but I don't see that being able to completely take out the brunt of the US impact. Again, this has to be taken with how shrimp is produced in India. Shrimp is normally farmed in India on a calendar year basis. We are at the end of the season, if you look at it on farming side. So on that side, at least there is a safety net that because we will slow down on this cycle, or we have already slowed down on this cycle, and we have not overproduced. So the whole environment is safe. And it's only the next cycle, which probably starts in January, February, where we require clarity before that cycle to actually go in for how big that cycle has to be. So on the flip side of things, if you look at it, where do we stand? We stand at a place where already shrimp prices in the US are up by 50%. Uh, Beginning next month, in a couple of days now, we could be looking at 100% shrimp price rise. Of course, that will lead to an inventory completely getting washed out, whichever is there in the US. Now, only threat is, will somebody else be able to fulfill this gap? Will somebody else be able to provide these products? The answer is no. There are only two countries that India competes with, Indonesia and Ecuador, in for the US market. Uh, Ecuador is not capable of producing the goods that we sell as of now. Indonesia is capable to some extent, but it has problems of its own. Recently, there was some development where some, I don't know how should I put this, radioactive shrimp, at least that's what the phrase is going around. Uh, Radioactive contamination of shrimp was found from the Indonesian suppliers. So I don't think there is anywhere where our share is moving, So that share is stable for now.
Okay, and since